Good morning. It's Friday, September 26th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So silver hits $45 for the first time since 2011, and gold winds up near its record highs. So silver rose to $45.53 an ounce, pulling back about 20 cents off of those highs here in this pre-market trading. We're green across the screen in most of the metals markets here, and a bit of red here in the U.S. equities. So looking at silver, it has rallied about 2.6% yesterday, extending its rally and lifting about 55% this year. Gold priced about $40 shy of that record set on Tuesday, so that's $38.2460. Your first level support on gold is Wednesday's lows at $37.4970. Now, some of the drivers here, really the surging demand for precious metals and ETFs. The inflows into global gold ETFs surged to a record $10.5 billion so far in September, with year-to-date inflows exceeding $50 billion. September gold inflows have been mainly driven ex-China, which is very important. That means that the rally and the broadening of the market here of who are the participants coming into this market is very important. They're really reflecting the weakening U.S. labor market, the tariff-driven growth concerns and Fed rate cutting cycle, as well as a change in the leadership over at the Fed. You look at platinum prices jumping about 3% here yesterday, still extending their gains here with the October platinum at $15.50, the January platinum at $15.72. That's both up about 1% here on the overnight trading session. Now, both as an investment asset and an input into industrial products such as catalytic converters, we've seen platinum prices surge about 65% this year as multiple consecutive years of supply deficits are set in the coming years. Now, looking ahead, traders are going to focus on that U.S. personal consumption expenditures data that's due out here at 7:30. This is the Fed's preferred measure of underlying inflation, and it likely grew at a slower pace last month, which would boost the argument for more Fed rate cuts. You look at a lot of the data coming out. Remember, this data always looks in the rearview mirror. So when we get forward over to next week and we look at that employment data that's coming out, that's going to be closely watched. It's going to reflect data that happened in September. Well, what happened in September? We saw weakening labor market continue, so I expect to see softer data then, and that's when you should see 2-year Treasury yields, 10-year Treasury yields back off, the dollar index back off, and what does that do? That generally boosts risk assets, such as the precious metals, such as the U.S. equity markets. That's why many of these dips here have been bought back up, and markets continue to drive higher. So let's check in on the setup here on the U.S. equity markets, on the precious metals markets. So Bloomberg economists, they expect that gauge here for PCE in August to keep year-over-year inflation unchanged at an elevated rate of 2.9%. As long as we stay below that 3%, we shouldn't see too many fireworks in these markets here. The market here this morning, as far as U.S. equities, a bit directionless here, where we have the S&P 500 slightly lower, 66.59, the NASDAQ down about 40 points at 24,591, Dow slightly higher here, and the Russell 2000 closing in on that critical level of support right around that 2420 mark as seen in the chart pack. You do have the FANG slightly lower, the dollar index slightly lower. Really a mixed picture here in the currency markets. Cryptocurrencies really getting hit here yesterday, holding on to that bullish support here and those longer trend upwards, but coming back down to critical level of support that we've been monitoring and that we've been watching closely over here. Now, looking ahead here, we are going to have a few other things. We do have tariff headlines grabbing the market after Trump announced a fresh round on pharmaceuticals, heavy trucks, and furniture, including 100% heavy on duty on patented drugs. So that's where your gold market started to accelerate a bit up this morning here. So concerns around that government shutdown at the end of the month having very little impact on stocks. We go back and we look over the last 20 potential shutdowns here. We've seen no real material movement here, as they always seem to find a way to spend more money and appease both sides of the parties here and get the job done as far as keeping the government open. You look at European stocks, those gains, as traders are really kind of unmoved here as far as what those tariff plans are, because of the fact that Trump has often come with a hard stance and then he's reversed on all these policies. We saw Asian stocks fell here with some key regional benchmark falling the most in over 3 weeks. So we saw really it was the chip makers and the Chinese tech had really pulled back after those recent gains. So the MSCI Asia Pacific Index was down about 1% here, with TSMC, Samsung, Alibaba, the biggest movers here dragging the market down. So of course we're going to have that August core PCE, the headline PCE coming out. We'll have University of Michigan confidence data coming out, Fed's Barkman, and also Bowman continuing to speak. So you look at what's going on in the currency markets and also in the 10-year Treasury yield, because we're up here at about 4.1718% here, and this has kind of been one of the highest levels we've seen. We've seen a breakout in the dollar index back to the upside, and these markets, they tend to bounce from oversold, they tend to correct from overbought, and that's what we're starting to see here today with slightly edging lower. So you go to the CME's Fed Watch tool, you go to that October 29th meeting, the expectations are an 87.7% chance of a 25 basis point interest rate cut. What's been gaining on these has been the no change here, jumping up to 12.3%. You go over to the poly market, it's an 81% chance of a 25 basis point interest rate cut, 3% chance of a 50 basis point cut. So the biggest mover here is the unchanged at 17%. And at what had happened? GDP unexpectedly rise. But if you look at a lot of the analysts, they were expecting that GDP to rise. So it's a bit of a blow off top here and a bit of a extension move there that I feel is a little bit more that it should have moved. So we're just seeing some short covering, some FOMO buying, some reversing taking place in these markets. And that's what happens. That's what triggers. And that's when you get the volatility excuse me, pushing up, volatility index pushing up here, and it gets close to that measure here where we start to see a bit of FOMO trading back and forth. You go to the ETF flows here. Well, they were buying gold, platinum, palladium, and they were selling some silver. Naturally, when you get these markets making these extensive moves higher, you get a 2.6% move in one day. It comes natural that traders tend to trim these positions. So year-to-date percentage change, both gold and silver up 13%. The exchange-traded funds, they added about 79,000 troy ounces of gold. Total gold held by the ETFs, again, up 15% to 96.2 million ounces, and that's the highest level since October 18th of 2022. So they cut about 95,000 troy ounces of silver. Not a real big deal here. It would, if they would have cut 9.5 million, that would be a bit alarming here. So we'd have to see what they were doing after that. So you look at the gold-silver ratio, 83-1, and I still believe that by the end of the year, we should be sub 80 here at some point in time. So you guys got any questions? You want to open up futures trading account? Shoot an email to info@bluelinefutures.com. Remember that futures and option trading does involve risk of loss and it may not be suitable to all investors. Good luck and good trading.